added to the portfolio today is called vEmpire.
And they are the largest decentralized metaverse investment organization in the world.
Hello, everybody, and what a lovely day it is. Let you kick off, and I'll do some button tapping in the background. You know what comes after Roby and Qcoin? When Binance. Straight away. Not used to this. Mysterious background as well.
Yeah, all on brand. All on brand. You're right, Dom.
Is that a ring light that I can see reflecting?
Yes, indeed. Remember, I told you to get one.
I do remember. Served me well. Always got that now. Looking like a suspicious OnlyFans account popping around somewhere.
I gotta make that extra cash, you know.
Don't tell Yasser. He'll be sorry for
that. He'll be my number one subscriber.
Definitely. I'm not sure that people are prepared for the doom and gloom that's about to be.
Yeah, no, I know it's going to be quite depressing, but it'll be a lesson nonetheless, and I think it'll prepare people for what's to come. So yeah. Oh, there we go. We've got Jeff Crypto in house saying two chads.
There we go. Bank of Canada's just hiked interest rates by 75 basis points. Pound falls to weakest level against the dollar since 1985. Good. All going well.
We're starting the podcast really well, aren't we?
I've just got Bloomberg on in the background. Tell you what, it's probably the most. It's not even the most depressing thing. The thing that angers me the most is the guests that they have on, and they all tell you it's going to be fine. They all tell you they're bullish, and it frustrates me. Actually, it's probably the opposite, because they're brought on to try and make everybody think it's okay. But because I know it's not going to be okay, I get angry because I start questioning myself. So where they're supposed to make me feel better, because I know it's not like what they're saying, it just really pisses me off.
Is that just to not ensue panic and to not, like, because I'm guessing if all these people just start saying, oh yeah, by the way, the world's going to shit, everyone is just going to start like dumping their stocks and start hoarding just essential stuff like the pandemic.
There's not enough like liquidity as it is. Like the volumes in the market are like so low. Even in crypto, for example, I was on Binance yesterday, and I was buying Mana and Sand. I think that we might have a short-term bounce here, basically. But it's, I think it's short-term bounce. So I picked up Mana and Sand, and I did pretty hefty positions, like, tens of thousands, low, like tens of thousands. And it was enough to like move the price. You could visibly see it, which was worrying for me, because if you can do that, and it's like the stock market, like there's like trillions and trillions that, like BlackRock, for example, has like over $1 trillion under management. Trillions and trillions, in fact. I think they lost $1 trillion.
Jesus Christ.
Just so far this year. Obviously it's paper, isn't it? It's not actually like they didn't sell out of it. It's not on a book loss, but when people actually start selling, because the liquidity is so poor, the same way that my like 30k mana buy pumped the market visibly on Binance, like super liquid exchange, it will have like the opposite effect. So once people start actually unloading, if the hedge funds decide it's time, it's just going to absolutely wreck everything.
Yeah, we've got Sage in the house saying, I mean, order books on exchanges getting thinner and thinner. So
very. I actually had a screenshot. I was speaking to our market makers, and it was I screenshotted the order book on Binance for Bitcoin. Let me see if I can find it. Where is it? I got too many messages. I got to scroll all the way back down. But yeah, like between so at like 18,700, there was like orders to buy 186 Bitcoin at 187. 400 Bitcoin at 186, 263 at 185.
Bloody hell.
And then between 18.5 all the way down to 17,700, there was just 20 Bitcoin worth of buys between that level. So once like 18.5 goes, you got like 800 Bitcoin in orders. This is just orders like by
Orders set on
over 100 Bitcoin orders, because that shows you what the whales are doing. But yeah, between 18,500 and 17,700, which are like the main key levels, there's like nothing. It's just air. So we'll drop through that like paper.
nothing. Jeez. Well, shall we start the show officially?
Yeah. Yeah, let's do it. Why not?
So yeah, I guess I'll be the sort of guest / host this time. Obviously, this is Dom's show. If for those who don't know, I'm Estefano, CMO of vEmpire, and we thought it would be good to do an episode around the macroeconomy, especially given what's happening with inflation, the war in Europe, China, all that sort of stuff. So do you want to start with some questions, Dom, or do you want to say anything before we start with the questions?
I'll just end up ranting if I start talking about whatever. So why don't we start with the questions, and then I'll end up going on and moaning about something or shouting. Just looking at the I'm looking on Bloomberg right now, and just like Asian currencies are just like
Bleeding.
so bad. Well, yeah, they're just they're getting so, I don't know, it's just, yeah, it's really, really bad. Like the yuan, the Singapore dollar, the yen, just everything is getting obliterated. Like FX markets themselves, I remember back when in normal market conditions, you don't see big moves in FX because it's like super liquid. Imagine every single country in the world doing all the international trade. That's why the dollar and like GBP, cable it's called, is the most liquid market, and dollar yen is like one of the second, because there's so much international trade being done that people are constantly buying and selling. Like I don't know, something stupid amounts of like volume. And because those lower, I shouldn't say lower, so Asia is still easing. Japan has been screwed since the late 90s because they have an aging population. So little population is supporting such a high amount of people because they're living for ages as well, because they're all like super healthy. They eat like fish and rice, and it's really good for them. And they're living forever. Obviously not actually, but it's aging population. And since 1998, they haven't been able to grow. Like GDP has been screwed. So they've been constantly printing money, and they've been doing quantitative. When Bull ran, I don't know when he ran, but yeah. So they've been printing money for so long, or as they call it, quantitative easing, which just is printing money, but they say it's not, but it is. And that failed. So they did what we haven't yet resorted to, which is yield curve control, which now the Bank of England is talking about. And yield curve control, rather than raising interest rates, dropping interest rates like they do normally, they target like an interest rate and a bond level like in 10 years time. So they buy and sell treasury bonds based on keeping it at a certain level in 10 years. And that should stimulate growth or deflate or inflate. But now that, funnily enough, if you print trillions and trillions of yen, dollars, or whatever, eventually it makes its way into the economy, and Japan is seeing inflation, but they having to keep on buying bonds because they need to keep their 10-year rate down, because that is yield curve control. So they are doing the equivalent of like $1 trillion a month of printing yen, because they need to buy bonds in order to keep the curve down. So they're forced into the position where they are having inflation because they're printing trillions of dollars worth of the treasury bonds, and they're buying the treasury bonds. So the Bank of Japan now owns like 65% of government debt. So 65% of the debt of Japan is owned by the Japanese bank. So they're running out of debt to buy because there's no more debt. So they're buying trillions of bonds. So effectively, they're doing $1 trillion of QE every month. And the reason they're having to do it is because of inflation caused by the fact that they're printing trillions of dollars a month. So they're now in a Ponzi that they cannot stop. And they just
it literally sounds like a Ponzi.
It is. And the only way that they can, basically, the bet is, it's called the Widowmaker trade. And it's called the Widowmaker because people have bet against the Bank of Japan before and they lose every time because everybody, Dominic Ramirez. Ramirez is a way cooler first name than Estefano. And it's such a mouthful. But yeah, so it's called the Widowmaker trade because everybody bets like that the Bank of Japan cannot possibly be so stupid to keep going like this. And so people basically they short treasury bonds, thinking that they will have to devalue their own currency because it's so bad. And people have gone broke chasing this trade before. That's why they call it the Widowmaker. Like tons of hedge funds, tons of like young like people who think that they've got it figured out. They bet against the bank. They basically fight the Fed, but in Japan, and then they lose. But it's like the Widowmaker trade is well and truly back. So people are betting that the Bank of Japan cannot possibly keep printing trillions of yen. So the race is basically the Fed needs to pivot. So Japan is versus the Fed, and it's Europe versus the Fed as well, because everything is collapsing because the dollar is so strong. And the dollar is so strong because the Fed keeps raising rates and doing quantitative tightening.
Why does the Fed have so much control and power over like the entire world economy? Why is everything measured against the USD?
Because the US has always been the global superpower, and they are the debt and GDP engine of the world. So the IMF, the World Bank, all of these, all of these like international organizations. Bullshit. It's not. It's just the US, just in the IMF, and everything is done in dollars. And so the World Bank and the IMF go over to all of these poor nations. They go over to South America mostly, and they go over to Africa and they say, all right, here you go, here's tons of money to build like this dam or this project, and in return, just pay it back to us. But they end up spending all of this money on their infrastructure, which is great. It's a big boost to them. But what happens when you spend shit tons of money? You get inflation. So they give them dollars. They use it to buy their own currency, which inflates their own currency. They give all this stimulus, and so they get inflation, which devalues their own currency. At that point, they have to keep selling their own currency to buy dollars to pay back the debt. So they have to keep printing more of their own currency in order to service the debt in dollars. So the interest keeps getting more and more and more because they have to keep printing in order to pay back this debt. So that's historically how the US has crippled nations. And that's how they basically get the European Union, the UK, and everyone to support them in their wars historically. Basically, make it so expensive for them to say no that they have to sort of sit back. Or when they don't pay, they take their resources. They privatize their oil, they privatize their gold. Everything gets sold to Exxon, and all of these. It's just America is corporate America. It's run by corporates, and it's all based on this debt. So the reason why US hates China is doing the exact same thing the US does in Africa. And that's why they call it like the new Silk Road, because China is taking a leaf out of the United States book And they're doing the exact same thing. They're lending to all of these African nations in yuan and like the ruble and all of these non-US currencies, and just basically just doing what the US has done for years and years and years. But it's only bad when somebody else does it. The US only has a problem when it's someone else. But yeah, all this stuff has been happening for ages. It's like every single country that's ever tried, every single country that's ever refused the privatization to pay off the debts that they owe to the United States ends up on the blacklist. Yeah, so Venezuela,
like Venezuela,
Iraq, Afghanistan, all of these said no to the US. And so the US first comes in, they give them the debt. They say, oh, you can't pay it. Like, great, give us your resources. And if they say no, then that's when the tanks roll in. Or if it doesn't work and they get overthrown, like in Iran, they just blacklist them forever. Venezuela's the same, like 2 coup attempts by the CIA in Venezuela, but the people have trusted the president more than the CIA incited riots on the street. So yeah, that's pretty much why the dollar's so strong.
Yeah, it's crazy. It is crazy that us plebs are oblivious to this kind of stuff, and that we don't really think about this sort of thing. I think people in crypto think about this a lot more than just the ordinary people, non-crypto natives. So yeah, we've got some few questions here from the audience. So first one's from Harvey. With inflation so high, what's the likelihood of us seeing mortgage rates like we saw in the 80s?
I mean, it depends on mortgage rates in the 80s. I think in 1980s, like the interest rate was like got to like 24%. I mean, yeah, it's how long's a piece of string, really. I mean, they're certainly higher. They're already hitting all-time highs. Well, not all time, because obviously you saw them in the 80s at 24, but for recent times, nobody has ever known interest rates to be, I think the highest they've been up until
in the last 10 years.
Yeah, it's like 2008 or 2007 where they were at 2%. And then since then, it's just been literally zero, which has caused the mess that we're in. I mean, historically, the only tool to combat inflation is to raise rates and basically destroy the economy on purpose to slow demand. Just
spending, basically.
Well, yeah, if you make everybody poor, they'll stop spending money. And that's the playbook. As in, like, that is literally what it is. So it depends how quickly they can bankrupt everybody, and how quickly people stop. But the thing is, the demand is still there, and you can crush demand as much as you want. That's not what's important. Like, it's very easy to make people poor by raising rates super high, but what you can't destroy is like 30 years of reliance on China for cheap tap, everything made in China. And that's been like 20 years. It's like, it used to be a running joke, like turn something over, made in China. And China did that for so long, and everyone was so reliant on them for everything super, super cheap, that now nobody wants to trade with them anymore. It's a problem, because where do they get this stuff from?
Yeah, where do you get the cheap labor from?
And it's not cheap labor. Cheap in China, but it's not cheap anywhere else, because people are used to a standard of living that's a lot higher in the West. So you have to start producing your own stuff. You need to start paying people better to do it, which is a problem because it lowers profit margins. And it, in turn, by lowering profit margins, you have to charge more money for it, which causes inflation. And that's only the China problem. Now you've also got 20, 30 years of reliance on Russia for gas and oil, which is down the pan as well. So you can shock demand as much as you want, but you can't change that. You can't raise interest rates to undo, 20 years of energy reliance on Russia and 20 years of cheap labor rely on China. It just doesn't happen. You You can't destroy
Yeah.
that with interest rates.
This is one of the questions that came in on Twitter, actually. Like, what are the roles of the US, the EU, Russia, and China in the world? And China, obviously, it's for its like cheap labor compared to the West. Russia for its energy. US, obviously, the Fed. And the EU, what's like the role of EU? I guess it's like a smaller version of.
I don't even know what the EU is. Just I mean, it's just an Achilles heel. It's so indebted, it's so like bad that just everyone just ignores it. But I think like the French GDP hasn't risen since the great financial crisis, and it just hasn't gone up, but nobody seems to notice. And it's like a failed experiment, basically, that nobody wants to let go of. So I'd say, yeah, historically, it's been Russia for energy, China for manufacturing, Taiwan semiconductors, Japan tech, US for just debt and financial hub. UK was generally a marketplace. Foreign exchange, we were the largest. Commodities, we were the largest. But yeah, that's changed a little bit after leaving the EU because they obviously wanted to try and grab as much of that as possible by making it as difficult as possible for people to trade with us. But yeah, that's all been turned on its head by
the war and
mostly by the fact that China's got to the stage where they're a large enough economy that they don't want to build all of our shit that we give them, and they want to turn around and go, actually, we're not building all of that crap anymore. We're going to be the new US. And the US has thought, oh shit, well, now we've got to get rid of them. And how do you do that? There's obviously the blunt way, which is the start a war, or what they've been trying to do, force them to start their own. By doing everything in their power to inflame situations, aka
like Taiwan,
sailing through the Taiwan Strait, sending delegations to Taiwan, basically just egging them on to hobble themselves, to give them an excuse to sort of pull out all the stops, because they cannot be seen as the aggressor. That is the main thing with the US. They cannot be seen as the aggressor, and that's why in Vietnam you had what was it? There was an incident. It was called like the something incident. But anyway, there was a pretext for America joining the Vietnam War. Somebody in the comments, I'm sure, will have it, or something like that. But always
the Gulf Tonkin.
Yeah, the Gulf Tonkin incident, which was basically like a lie. It just got proven as a lie afterwards. It was just another false flag. Gulf of Tonkin incident. So it was completely disproved. Apparently, it was like some Viet Cong boats attacking a cruiser. It didn't happen, but it gave them the pretext to join the war. In World War II,
it was a cruise ship, wasn't there? It was a cruise. Yeah, I think it was that. Yeah.
And Nazi Germany even put an advert in the New York Post saying, "Do not get on this ship. It is going through areas,
like a war zone." Yeah.
Operate, do not go in. Nazi Germany put an advert out saying, don't get on the ship because it might get torpedoed. And then it got torpedoed, and there we go. And alongside that, they were doing everything in their power to anger the Japanese. Even though they weren't at war with the Japanese, they were banning all imports. They were doing everything they're doing with China now to Japan, basically just trying to piss them off and begging them to attack. So there's always been false flags, and that's what they're trying desperately again to do, basically. So right now, the US is losing its grip on the world economy, on world resources, and Europe and the US are further apart than they've ever been. And the US has royally hung Europe out to dry. With energy.
There's new alliances being formed as well between China, Brazil, I think it is, South Africa, Russia. Yeah, and India. And obviously, if you put those countries together, their GDPs and like they are a lot bigger than the US economy if you put them together.
Well, the Europe isn't with the US anymore because the more everything the US does to raise interest rates, the stronger the dollar is, the more it will destroy the EU's economy. It destroys everyone's economy, and that's why the US is doing it, because people no longer want to take dollars for their debt anymore. Nobody wants to get debt in dollars because they know that's the game. That's why China's doing it to like Africa, and why everyone wants to do it. People want to lend in euros, pounds, and other stuff, and all the Americans have to do is say, "Nah, we're going to raise rates. We're going to absolutely nuke our own market." But in return, everybody comes back to the table because everyone's saying, "Please, please, can you just do some stimulus? Can you just weaken the dollar?" Because then everybody is being made bankrupt because they have to pay this interest. They have to keep printing their own currency in order to service debt. And so it weakens their currency. Dollar gets stronger and stronger because there's so much buy pressure, just like normal markets. So that is the last hurrah of the United States in order to try and get back to number one on the geopolitical stage, is to try and make everybody so poor that they have to come back to them. And that's why everything will go so badly, because that's the game, and we're the pawns.
What part do you think crypto plays in this? Because it's like Mike's question comes in quite well, actually. It's basically, so do you think it'll likely that we see a new kind of stable coin that no longer relies on peg to the dollar?
Somebody said yes, it's called VEMP. Yeah, it's pegged to and the stable coin is $100. So buy. Okay, not financial advice. Don't sue me. It's hard. It's like, I mean, we already have the digital yuan, for example.
And you said that on that digital one, it's quite like but is it an actual crypto, or is it? Because I remember you mentioned this once in one of our meetings, and you said that like it makes it, or is it that China that has created a digital currency that makes it a lot easier to track its citizens' transactions and to sort of
well, basically a central bank digital currency is like the worst nightmare of any like freedom lover in the world, because it means that, you know, whoever controls the currency controls the financial system. That's why the US is doing everything in its power to get people back onto the dollar. And if they are successful in doing that, basically we will see all of the other currencies collapse, because that's the aim of the US, is to keep raising rates, because then everyone has to devalue their own currencies over and over again until it gets to the point where their currencies are worth so little that everybody has to say, all right, then we'll come back, we'll use a dollar. Dollar stable coin comes into existence, central bank denominated. Everybody uses that. And then the US and whoever controls the central bank digital currency controls every human being who has that, because they can effectively, like how you blacklist a wallet for tornado cash, they can just blacklist you from buying food, energy. Like you're already seeing in Sri Lanka, when they had all of this stuff kick off, energy passports. They're already talking about it in Europe. You know, it starts with vaccine passports. Now they got energy passports to make sure it's all being done for our own protection. Of course, everybody just needs to make sure that we're conserving the energy, and we'll do that by everyone getting a certain amount, and it will all be done on an app. It's just the beginning.
So it sounds like we're going to go into like, especially in Europe, and obviously the UK is not part of the EU, but it is still in Europe. Sounds like there's going to be a lot of like energy rationing, which brings me to my next question. Like, what is the role of like energy in the macroeconomy? Because like the way I see it is money is just like a religious belief. Everyone believes that $1 is equal $1, but like the actual stuff that is very important, the tangible stuff, is energy, right? like everything you produce, everything that your life revolves around is energy, like oil. Like this smack was made by oil. Do you see what I mean? Like,
so energy historically is pegged to good economic conditions. There's a lot, obviously, that can screw with that, like wars, supply chains. Right now, for example, the Iran nuclear deal has an impact. Libya is currently getting, it was anyway, I think there's a civil war going on in Libya. They have a lot of oil production. And obviously you got Ukraine, Russia. So there's a lot of factors, but generally, good economic outlook, oil up, energy up. Bad economic outlook, oil down. So I think right now, oil just dropped below 85, which 85 is insane for nowadays anyway. I remember in normal conditions, like when I first started trading, the oil was above $100 a barrel. And that was because it was a good outlook. That changed around like 2014, 2015. It kept getting weaker and weaker and weaker. And it got to like $30. Then COVID took it to negative, and then it sat around $14. And anyone who bought oil at that time, like, amazing, did really, really well. But it kept pumping because of good economic conditions. But there's good economic conditions, and then when they get too good, everything overheats. And it happens in 2008, it happened to the property market. But unfortunately, in COVID, it happened to absolutely fucking everything, because everyone got given just free money. Everyone stayed at home, spent no money, and just got free furlough. Everyone got put on, and they over-egged the pudding so much. Effectively, you've got like I saw somebody use this analogy. I don't remember where it was from. But let's say that you've got a bucket of water, and stimulus and like quantitative easing and printing money is a watering can. And the bucket has holes in the bottom, but only small holes. So in a good functioning economy, you pour water in slowly and it gradually fills the bucket. And if there's a certain equilibrium, the water that's poured in and the water coming out, and it's level. But what happened was the Fed combined with sort of the government at the time just completely went nuts, and they just literally like stuck it under a waterfall, and it started bubbling over and everything. And so because the Fed was doing so much QE and printing so much money, combined with so that's like monetary policy. You also have fiscal policy. Fiscal is the government, monetary is the Fed. Central banks aren't government, they are private institutions.
So the Fed is a private institution.
Yeah, and
just
the government.
To make it clear.
Cool. So you had so much fiscal stuff going into the bucket, and then you had the Fed going into the bucket, and so it started pouring over the sides, which it is now. And so inflation is going nuts. All the water's pouring out of the bucket because there's way too much in it, and not enough is coming out. So because of that, Fed has to intervene again on the monetary side. So monetary side, they're doing quantitative tightening. So they're undoing what they did. So let's say the holes at the bottom now are getting widened because the Fed is allowing more out because they're doing quantitative tightening, they're taking it out. But at the same time, Liz Truss and her merry band of retarded politicians are announcing all of this new fiscal stimulus to help everybody because of how bad it is from the last time they did all the fiscal stimulus. So they're all chucking more into the bucket because they are giving us free money just for our bad energy, which is their fault anyway because of the previous fiscal stuff. So the Fed is sitting there going, well, for fuck's sake, we're trying to let all this heat out of the economy, and they're just chucking more into the bucket. So then the Fed has to keep selling off assets. Like 80% of the stock market is just air. It's just bullshit. It's just the Fed has been buying it for so long. It's so high up. So the reason it's bad that governments keep on basically, oh, we need to solve inflation, let's print more money to help people. No, that's what did it. So yeah, it's just like it's just so simple on what to do and what not to do. It almost makes you think like it's part of a bigger scheme or plan, without sounding like a conspiracy theorist. But I think it's starting to get to the point where
it does sound like
stuff that seemed absolutely mental to think a couple of years ago is just like alarming.
I think one of the things that, if you could just say a few sentences around this, maybe one or two, what is actually like quantitative tightening and quantitative easing? Because I'm pretty sure there might be a few people in the audience. I mean, I'm not that familiar with those terms and what that actually means.
So as all quantitative tightening is the opposite of, it's trying to undo quantitative easing. So quantitative easing is a clever way of saying printing money without it seeming so obvious to everyone that's going to cause inflation. So printing money is debt. So what you do is you print all of these Federal Exchange notes, which are given to all the banks. And so these are like treasury bills. They've got like no interest whatsoever. So they are just assets on banks' balance sheets. So the theory is if you give enough of these low yield debt instruments to banks onto their balance sheets, they then aren't making enough returns because they've got all this cash. And so they need to deploy that cash. And they need to deploy that cash in much more aggressive ways and much more risky ways because they need to get the returns because they got all this cash. And when you got cash, you got cash drag in a portfolio. If you've got 50% of your portfolio invested, the other 50 is in cash. If that half does 10%, the other half's doing nothing. So it's only 5%. So QE encourages banks to do riskier and riskier lending and riskier investments, and that supports the economy because people are getting money for doing stupid stuff, and people are doing stupid things because they have to, and people get riskier and riskier and riskier. So QT, the bank just like rugs the banks, as in the central banks rug the retail banks. So suddenly all of this cash on the balance sheet is disappearing. So what do the banks have to do? They have to deleverage. All of the risky shit they're doing, they've been left with. They still have that, but suddenly the cash is disappearing. So they've been left with all this risky assets, which inevitably default because that's what happens in a bad economic environment when you've been lending money to people that shouldn't have money. It's like I saw Bank of America announced like 0% mortgages for specifically for ethnic minorities. And that is just through our own world's misdoings. Obviously, people from those backgrounds are more likely to default because our world is racist, and that's just accept that that's the way it has been. So inevitably, because the world is racist, they're more likely to default, but they're being targeted by banks specifically for loans. Why would they do that? They know they're going to default. And the reason why is that when they do overextend themselves and buy the house, when it inevitably goes to shit and they can't pay it, the banks swoop in and take that asset from them at a massively discounted rate because they couldn't afford it. So therefore you can pick it up at auction for like cents on the dime. So yeah, the Fed encourages banks to take these risks, and the banks have to put the money out. They can't just have it on the balance sheet. So they give it to us as the people. And so we're all indebted up to our eyeballs with stupid mortgage rates because we're all so used to 13 years of like 0% and paying 1 or 2% on a mortgage. Like that's like that historically, mortgage rates have been between 5 and 10%. And that would cripple most of us. But we're not used to it, so we don't realize. And another thing they did, Bank of England announced 6 months ago that they were taking off the affordability test from mortgage lenders, because usually when you apply for a mortgage, they have to check. When I got my mortgage, they basically have to do a affordability test. They say to you, can you afford this if the rate goes to X amount? So if the rate goes from your 1.9 to a 4.5 variable, and if you can't afford it, they don't give you the mortgage. Well, the Bank of England got rid of that because obviously they knew that nobody would be able to afford it soon. So they actively took off the affordability requirements for banks to lend money. Again, why would they do that? Like, it is counterproductive. All it serves is to make sure that more people default.
Get in debt. Yeah.
People think that like the government's on people's sides and everything, or the central banks are, but they're not. They're purposely trying to swoop in and take the assets from the people, because everyone is so used to low interest rates that nobody has any idea of what it's actually like to have a 5% interest rate, because it like doubles your repayments.
It's like what happened in 2008, right? The people kept getting loans and loans and loans and loans, and then no one could pay back the mortgages.
Yeah, and people now have like interest only mortgages where you make a commitment, basically like 10, 20 years ago. You take out this mortgage and the mortgage says, all right, just pay us the interest. You don't have to actually pay us the repayment, but in 20 years time, you just need to have the money for us. Like, we'll trust you, just, go and get that money. And obviously nobody has the money. They've just been paying this tiny interest rate. Well, even if it's not tiny, but rather than the repayment plus interest, it's just interest. So 10, 20 years later, banks come knocking, oh, have you got the 200 grand? No. So, okay, all right, we'll have your house then. There you go. Like, easy.
So they're just basically preying on not the weak, but like preying on people, because they can wait the 20 years for the 200k, but obviously people like us
fail. The government will just bail them out if they lose their money. We don't have that. We don't have the protection. We are too small, so we will get bankrupt and they will take our assets and we'll start again from the beginning. But banks don't do that. They just go to the government. It's like we've lent all of this really risky money and we've lost all of our money, but you need us in order to function. So
too big to fail. Yeah. We'll go into some of the questions now that we keep getting quite a lot, and there's some good ones here. So from L, what caused the constant rise in inflation, lack of economic income growth, increase in concentrated wealth, etc. to happen? Common enough, the gold standard maybe?
That was back in that was as a reaction to the Great Depression. So that was ages ago. I mean, capitalism and wealth inequality functions to like capitalism increases wealth inequality. It's just the way it's embedded. Like, the system functions on the predominant amount of people in a society working for the people who own the capital and the means of production. So inevitably that increases wealth inequality. What supercharged it was the 80s. Ronald Reagan, Margaret Thatcher turned capitalism from growth to growth at all costs. And that was a time of austerity. That was cuts as well. So before the 1980s, it was easy. You just grew, and that was enough. But then people realized, oh, wait, we've stopped growing. How do we grow when there's no growth? Well, rather than grow, you cut, because you can artificially create growth by increasing your profits due to trimming. And so that's what sort of really raised the wealth inequality, was when people started trimming rather than just growing. So there's been no real growth in like the world for like the past 10 years. Since the financial crisis, there's been no real growth. It's just all been fake. It's just been cuts. And that means low salaries, which means that everything gets trimmed to the people, and then we get more poor, people get more rich, they print more money, which raises asset prices. We can't afford assets because we're poor. The people who have the assets, which are the people who own the capital, all increases. So in order to fix the problems of when the stock market crashes, the reason why it's so bad is because it's all the rich people's money that's affected. Like there's a small amount of, correlation. For example, most of our pension funds will be in the stock market, but in reality, is there actually much impact? Like when the Fed starts printing money again, stock prices rise. And that means that rather than fire people like companies were going to, or it's supposed to prevent like job losses due to that. But the thing is, that isn't good for people. People seem to have this crazy idea that, well, thank God the Fed's printing money again because I haven't been fired. But the stock prices go through the roof. Everything else goes through the roof. But the benefit for the people is you kept your job. You're in the same exact position you were before. Well done. But everybody else is so much better off. So that increases wealth inequality because in order to keep your job and stay in the measly position that people were, everything else has to inflate. So that's what causes the wealth inequality, is the fact that the rich own the assets and asset prices are what is helped by money printing. So the actual people just keep their jobs, and that is the benefit.
What would you say is the solution to all of this then? Because like I'm a true believer in like capitalism. Is capitalism good, do you think? Like, or like anything, people abuse it?
Well, like I said, capitalism was doing okay until it got supercharged. But I mean, capitalism is doomed to fail, and that's not me being some sort of communist. It's just if an economic society runs based on constant growth, which is capitalism. Capitalism is a debt-based society where you need to outperform the interest rates on debt in order to grow, and that is capitalism. And so it's growth by all means. So you cannot function in a society that constantly grows because at some point you don't grow. And in order to transition and stop, it's like, for example, capitalism has got so out of control that a market should function on efficiency, right? So if I was going to build a chair, I would build, the best chair that would support me. And so I can have that chair for ages. I don't need to build it again. But now capitalism is so out of control that they will build a chair so it breaks in 6 months' time and they can build it again. Like that is not sustainable capitalism because you're no longer creating market efficiency. You're creating purposeful market inefficiency in order to capitalize on it because you know that you can sell it again in 6 months' time. That's no longer an efficient market. That's no longer capitalism at its core, which is supposed to function to perform the most efficient market, which it doesn't because stuff is built to break now, which causes so much waste, which again, we can get into like environmental impacts of all of that. But yeah, it's out of control at the moment. Like it should function to be as efficient as possible. But at the moment it isn't. It's so profit at all means. And that is actually at the expense of market efficiency now, because they need to purposely break stuff in order to just in order to grow. So that's where capitalism isn't and wasn't bad up to a stage. Then after the 80s, where growth stopped, suddenly, it just hasn't functioned the same since, and it's just been hobbling.
Yeah. It's I think you might be depressing us, Dom.
I already gave a really fair warning. I mean, there's a lot of the question like, what is the solution? Like, Jesus, like there's like hundreds of economists at the Fed, and even they fuck everything up constantly. Like, I mean, they probably mean to, but like, there is no perfect solution. There is only failure and rising from the ashes.
So
basically everything needs to get destroyed in order to rise up again.
Get
I
rebuilt.
guess.
Yeah.
You only
We've
learn.
got a couple of more. We've got a couple of more questions before I go into some questions that I wanted some answers from. So from Dump Me Daddy, which is an amazing username. How much time left does the US have as an economic leader, considering all the civil unrest and political division?
Again, like I'm Nostradamus, but I mean it's hard to say really. It depends on sort of the people really. Like when will the people have enough, or will they ever just not have enough? Like are we just so passive now that we would rather sort of slowly get led to our deaths than potentially enact change? Everyone's all like, everyone's a keyboard warrior, but how many people actually have bollocks to do something? I mean, I can't really talk. I'm constantly just working. I don't go out and fight for what's morally right. I just flip shit coins. But yeah, I mean, it's like when is it enough? When does that switch flick for anyone? And I think that I'd love to say that like this will be like the winter of where people realize like, these governments just aren't there for us. But I mean, a lot of people are just stupid. So yeah, I don't know. I mean, hopefully, but what comes after like the US goes, like I'd say hopefully the US goes. I mean, they haven't been very good, but who knows what's next. But will that happen? I was just going to answer is they want to. Will that happen? It's just a race, basically. How expensive? Yeah, it's a race to the Fed pivot. So as soon as the Fed indicates that it's done raising rates, the dollar will weaken. And when the dollar weakens, it's like the dollar rising is a stranglehold on everybody, every single other currency. The more the dollar rises, the more that they are squeezed. And as soon as the Fed pivots, the grip loosens. So all other corporates, countries, and everyone is just looking to the Fed. And until the Fed pivots, then, yeah, the Fed has to keep going, basically, with raising the dollar because they don't want... As soon as the Fed pivots, then that will happen, as in like the yuan, the ruble, etc., trying to make a new reserve currency. That's why the Fed can't pivot. So that's like the race, basically. It's a game of chicken, and we're all the losers.
On the topic of the Fed, what are your predictions on US CPI and Fed interest rates for this month? What do you think is going to happen? Up, down, stay the same?
CPI could go anywhere. It could be higher. It could be less. I don't think that any drop is going to be good news. Everybody thinks it will, but there's certain levels of inflation. There's core inflation, and then there's non-core, and then there's sticky inflation. Some stuff, like for example, a lot of CPI is purely energy, and energy prices are coming down, so CPI will drop in line with that. It's a big old percentage, but another big percentage is food, and obviously a lot of the world's food producers are currently screwed because, again, they are selling it in their currency, and their dollar's so king right now. Import export is, again, screwed. Trade balances are screwed. So I think CPI doesn't necessarily need to keep going, but I don't think that the people are putting way too much emphasis on CPI when they should be listening to the Fed, really, because the Fed is not talking about we'll wait for inflation and CPI to come down a little bit and then we'll pivot. Like, they're not talking about pivot, and they've made it very, very clear that they're going to keep hiking all the way through this year and all the way through into next year. So that's really what's going to predict it. Because what will happen, which is what happened and what caused the bull run in stocks, well, the bear market rally in stocks last time, is that everyone said, oh, hooray, CPI's dropped, the Fed's going to pivot, off we go. And then we start getting closer to it. And it's like, oh, well, actually, they said they're not going to pivot. They're going to keep going. And then obviously we crash back down. And then we'll probably have another CPI report come out soon. And if it's good, people will again go, yay, they're going to stop. And then people will realize that they're not. So I'd say listen to the Fed. And the game is don't fight the Fed. Don't ever fight what the Fed is doing. Because if you short when the Fed is printing money and loosening economic conditions, then you will lose because we're going to be running. But in the opposite sense, if the Fed is tightening and they're doing like quantitative tightening hasn't even started yet, and that will absolutely nuke everything. Because all the assets that over the past 10 years the Fed's been buying, they're going to start offloading. And that's going to cut through this volume like a knife. Like it will absolutely sink everything. So I am hoping that the Fed just gets on with it. I'm hoping that CPI comes in super hot because then the market will react very badly, because the longer it goes, the quicker we nuke, the sooner they turn the printer back on, which again will just inevitably lead to everything 10 times worse, but in a few years. And then the bull run starts again. And then my advice is everyone make as much money as possible, because the next time it will go to shit might be the last time. But hopefully we can nuke out of it sooner rather than later, because at the moment I'm just waiting for death.
So in an unstable market situation that like we're currently in, what is your suggestion for making profit then? Is it just short everything, keep some cash aside for when we see the bottom? What does the bottom look like?
Don't try the bottom is the main thing. Don't try and find the bottom, and don't try and find the top. The trend is your friend. Follow what the Fed is doing, and if they are saying that they're not going to pivot, they mean it. Don't worry about what the market is doing. The market is stupid. The market does what the market wants. Follow the Fed, and if the Fed is saying we're going to QT, not QE, and the Fed is saying we're raising rates, then you need to be selling rallies. And if they suddenly turn around and they say, okay, we might lower rates, then start buying. But don't try and find tops or bottoms. You can, for your own interest, you can call it, but there's no point catching a...
There's a saying in trading, isn't there? Pick bottoms, get smelly fingers, or something like that, right? So
there's a lot of different euphemisms for it, but that is definitely makes sense. Just trend is your friend. Just don't try and I think I tweeted this morning about I see these influencers we're going to bounce to there's tons of them. They're all trying to pick bottoms and do. But I hate TA in market conditions like this because what is the absolute point? TA is only useful because a certain amount of people do the same TA and therefore they use it as an indicator. It doesn't mean anything. It's useless until people start using it, and then it's effective, which might sound like a riddle, but it's true. It's what is an upside down Bart Simpson inverse head and shoulders? It is what people create it. They made it up, and enough people follow it that you'll find people buying and selling based on it. And that's what TA is. But there's no point doing technical analysis and looking for long positions in a bear market. You shouldn't look to sell rallies because the trend is down. The Fed is telling you the trend is going down. They're telling you they'll raise rates and that they're going to be selling assets. So don't look for long positions to try and catch falling knives. Sell all the rallies. Keep wide stop losses. As long as you get the trend right, your call, your put will eventually be right. All you have to do is wait. If you get the trend wrong, then you're going to be offside for a long, long time. So set wide stops, stick to them. Don't just move them. I'm guilty of doing that. It gets to 5 points to my stop, and I think I reckon that it might get to like 11 rather than 10, so I'm going to move it to 12. It gets to 10, maybe I'll move it to 16, and you just keep moving it up, and it's just stupid. Just look to follow the trend, and then you'll be.
So there you go, everyone. A bit of alpha. Sell the rally. Don't go long, especially not in this market. I think we're getting questions about the merge, and I actually wanted to ask you a question around that. So we'll answer Doge or SHIB's question, which says, do you think when the merge happens, I'm guessing like Ethereum, will it blow up?
I think they mean Ethereum Classic. Not necessarily. So I know for a fact that there's an anonymous group of developers who are basically, don't ask me why, but Ethereum Classic, a lot of people don't know, used to be Ethereum. It was Ethereum when it got hard forked because of a massive hack back in like 2015, 2016, when the DAO, as in like the DAO, was hacked, and it was such a big market event that they had to hard fork the whole chain to like screw over the hacker. Now, Ethereum Classic was born because some people didn't like that. They said it wasn't decentralized, which is true. So some people started trading Ethereum Classic as like the original Ethereum, and then Ethereum was born from that. So now what's happening is different. It's not a hard fork. So there is no like Ethereum Classic left behind and there's a new proof of stake one. It is just Ethereum is moving to proof of stake. But there's an anonymous group of devs that have said that they're going to be dropping like something like ETHW, which stands for like ETH proof of work, and they're going to be continuing current Ethereum, so not Ethereum Classic, but current Ethereum, but as a proof of work version. So if that's true, then it will be a competitor to ETH Classic. So it's effectively a new ETH Classic, but it's not ETH Classic. It's the current ETH continued and not proof of stake. So those two will end up competing for each other. So it depends on who the winner is, really. So I wouldn't necessarily say it means Ethereum Classic will do really well, because they're going to suddenly have like a twin competitor. So it might be a buy the rumor, sell the news type of event with ETH Classic anyway, because usually if enough people think something good's going to happen, it will go wrong, because the market's never that easy.
Do you think the market's already considered the merge? I've read some on Twitter, some people saying that the market still doesn't believe that's going to be successful. So it's not fully priced in yet.
Well, I don't agree with that. I think it is priced in. I think that ETH is doing very well to be where it is now. Like if you remember, Bitcoin is what? I haven't looked now whether we pumped or dumped, but if we're at 19K, like last time Bitcoin was here, ETH was like around 1K, like between like 800 to 1.2. So it's already doing much better than its equivalent based on the conditions. So for that reason, I think it is priced in. I think that it's definitely going to run a lot better in the future. But yeah, I don't think that like there'll be a new pump. At the moment, the reason why we have been pumping a little bit is because there's all of these like airdrops, like this one, POW ETH. So yeah, proof of work ETH. So if you own Ethereum at the time of the move to proof of stake, they're going to airdrop you this old ETH. So effectively, it's like an airdrop rally. It's like, if you hold ETH at this time, then we'll give you an extra ETH, but it's not going to be worth the same amount. So that's why we've had this like pump, which has obviously got sold into after Bitcoin nuked for no reason. Essentially, I think it is priced in. To be honest, I think it could dump a lot more.
One last question. It's around. Oh, Siri. One last question around the macro economy, and it's around population and reproductive rates declining. How bad? Huh?
Where'd this one come from?
That was someone from Twitter. But how bad is, like, because it's going to be a lot more debt, and who's going to that debt has to be passed on to people, and if there's less people than there is now, surely that causes some strain somewhere. Do you see what I mean?
Yeah. Well, it'd be like Japan, and is now like just there is no growth because there's not enough people supporting too big a population. But the worse things get, the worse life expectancies get, and therefore, I mean, there will come a point, as there is in any animal population that's ever existed ever, where you peak, and humans can peak. We are an animal, and there is only so much space in the world for all of us, and we've been in an ecological and environmental area called the Holocene or Holocene. I don't know, I always say stuff wrong. Where it's been the perfect conditions for humans to thrive because we've been in an environment where we can grow food, and that has caused us to move from thousands of years as hunter-gatherers. After the Ice Age, humans were around for about as long as they have been since they were around as hunter-gatherers, and we were around as hunter-gatherers for longer than we have been in the past, like 40 years, where we've seen like a sextupling of our population. And the reason why is because of technology and because of the fact that we can grow food, and mass agriculture and farming has led to an explosion of the population. And that is only so sustainable. Any animal species, if you get too many in one space, they start to die because there's not enough resources for them. There's too many of them. So essentially that will happen to humanity at some point as well.
I really didn't think it was just going to get more depressing than it already was.
I mean, it's like all fiat currencies in the world have gone to zero. There's not a single one that hasn't gone to zero. Like, it is functioned, and they function to go to zero because they're not backed by anything. They're just paper, and they're paper forever. They are only money as long as people believe they are money, and after that, they just go back to paper. And again, humans are animals, and animals are a species, and species rise and species fall. We're not all suddenly going to collapse off a cliff, but at some point, the birth rate is going to be lower than the death rate. Fertility is dropping. People are having less kids. They're having kids later. And there will come peak, and then it will dip. It's just it's just nature.
Yeah, it's just nature. One last one before we go. It just came in. When do you expect the bull run to begin?
As soon as
when bull run?
Yeah, when bull ran. The sooner everything goes to shit, the better. We need everything to get really, really bad, and then it can be good again. Because there is only two tools at the technically there's three tools at the Feds and economists what's the one am I looking for? In their locker, which is lowering interest rates, printing money, and yield curve control. Back in 2020, when everything went to shit, and they said to the Fed, like, what tools does the Fed have if low interest rates and quantitative easing doesn't work? And they said, well, we got yield curve control. But now we can see by like the yen that is failing miserably, and is will just eventually, any other country that attempts it will just go the same way. That's sort of off the table now because it just doesn't work. It's like sending an economy to what are they called? It's like after a nursing home, like you're about to die. can't remember what the word is. But yeah, it's like before death, you do yield curve control because it will eventually die, because it will eventually just go off a cliff, and it will get to the stage where they keep printing. But yeah, there's no one.
It's so, if it's like it's so simple as letting everything die, why do they just keep prolonging everything? Is it just because they're fucking stupid, or is it just because they want to squeeze as much value out of whatever it is that's left before? Like, what is it?
It's you can't relinquish power. The monetary system functions to increase growth, wealth, and it does so in a disproportionate manner to the wealthy. And so therefore you have a current system that is so good at making rich people richer that why the hell, even if it's killing everybody, why would those who have the power and the wealth want to change that? Like, for them, it's the best thing in the world. It makes them even more powerful and even richer every single day. So what you're saying is, so 90% of people are saying, actually, this isn't working for us. But the 90% of people telling them that has 10% of the wealth. And the 90% of wealth is the 10% that's saying this works great. So that's what it is. So eventually it's just when people finally, realize and decide enough is enough. But yeah.
Right, I think that's it for all the questions, unless anyone has any last minute questions. I think we've been
have a nice sleep and don't jump off any balconies.
Yeah, basically, I'm gonna go to the gym now, put my headphones on, and try to not think of all the depressing things that you said.
And cry en route.
Yeah, cry en route. I'll be bench pressing, crying. But yeah, thanks everyone who joined, and please remember to subscribe, like, and share. And yeah, don't get too depressed. And if you got if you got any questions or anything,
keep them to yourself.
Yeah, pop them over to the Barracks chat on Telegram or on Discord or on Twitter. And Dom or I or someone from the team will answer them. So yeah, thank you very much, guys.
Thank you, everybody. See you later.